Yo, what's good, everyone? It's Luis here, and I'm about to show y'all basically like a beginner's course on how to start day trading. And I'm not giving away my strategy or anything like that because that's obviously. Anyways, though, right here we have something called a bearish candle. Bearish means going down. As you can see, the price is over here, right? A bearish candle means that price is going down, and a bullish candle just means that price is going back up, right? And they're the opposite, right? So the top, right, they both have the same high because that's the highest point that price went before going down, or whatever. In this case, right, it went down again. Then, as you can see, I have something called a wick, right? Some people call it shadow, I guess. I don't know. I like to call it a wick. But for a bearish candle, the top where you see this flat bar, that's where the price opened up, right? And it came all the way down here, right, to this low, because this is the lowest point price went. But buyers pushed it back up to here, and they closed it, right here. So it opened up here, closed right here. So it probably opened right here, went up, then came all the way down, then came back here, and it closed. And the exact same thing for a bullish candle. So it opens down here. I mean, the opposite for a bullish candle. It opens down here, then it probably comes back down here, goes all the way up here, but it closes right here. And these are very, very important because this is literally how everyone trades, because these tell the whole story. Bearish candle tells you that there's people trying to sell the market and are trying to bring the price down. And bullish candles tell you that there's people buying in the market and they're trying to bring the price back up, right? So then you have these things called trends. You have an uptrend, right, where price is just constantly going up. Then you have consolidation, where price is basically going sideways. You can see it goes up, then down, then up, then down, then up, then down. It stays at this zone, and it just is basically moving sideways. You can see it's not going straight down or it's not going straight up. And then you have a downtrend where price starts up here, goes down, goes back up, starts down here. You can see the market is moving down, right? So then you have these things called higher highs and higher lows. And for a higher high is the highest point that price went before making another higher low, which is the lowest point that price went before making a higher high, right? And then of course you have a higher low again, and then you have a higher high again, right? And if you drag the higher high, if you were to drag a higher high to another higher high, right, and draw in the middle, the higher low would be there. And then if you were to draw from a higher low to another higher low, the higher high would be in the middle. And then again, if you were to draw from a higher high to another higher high, the higher low would be in the middle, right? And then also we have right here a lower high, then a lower low, then a lower high, then a lower low, then a lower high, lower low, lower high, lower low. And basically this shows you the downtrend, because this was the highest point that price went before going back down, and then it came back up, right? And it didn't take out the previous lower high, so that means that we're still on the downtrend, right? And like I was saying, if you mark these from this lower high to this lower high and you put the lower low, it's always going to be in the middle. And then from this lower low to this lower high to this lower low, the lower high is always going to be in the middle. And then from this lower high to this lower high, the lower low is always going to be in the middle. And why is this so important? Because you always want to be trading with the trend. And I hope you guys are taking notes, because you're not going to learn at all just from watching this video, I promise you. Because how it works is that we retain more information when we write things down, because it makes it go into how we would explain it. And that's how we really learn, is when we try to explain things to other people, right? So then again, a lower low to this lower low, the lower high is in the middle. And you always want to trade with the trend. If you see it's a downtrend, you always want to be looking for sells. And if you see it's an uptrend, you always want to be looking for buys, right? and then comes here where we call support and resistance. So support and resistance is basically points where price rejects off of. So this green line is a support zone and this red line is a resistance zone, because price came here and then went up here to this zone, but then it came back down to this zone, right? And you see it bounces off of this zone, right? And some people call this like the floor and ceiling, but in simpler terms, it's just support and resistance. So then price comes up here, rejects down here. And what happens when price breaks below a support zone, that support zone then turns into a resistance zone. So price comes down here, goes back up there, comes back down here, goes back up there, and you see it stays resisting this zone until we have a breakout above, right? And when it breaks out, this resistance that was formed from here turns again into a support, and then price going back up, and then this original resistance zone turns into a support zone. Boom. Then goes back up, hits this support zone again, right? And then goes back up. And obviously it doesn't look like that. This is more how it would look. It would look like price going up. You see this candle, and then coming back down. This candle hits that same area again. And then this candles hit this area again. And then boom. You can see it's just going. It's just resistance up here, and then support right here. But then when it breaks out above, now this turns into a resistance zone, because price just, every time it gets to that point, it just keeps going down. It never goes back up. And then the OG resistance zone turns into support zone right here, right? And then again price goes back up, resists at the same zone, resists at the same zone, resists at the same zone, then comes back down for support. Then since we broke out above, right, it comes back down to this original resistance zone, and it starts becoming a support zone. And that's how support and resistance works, right? And then you have these things called time zones. And what are time zones? They're different hours of the market. And you can see right here it says less volume. That means that it's more slower, and that there's not a lot of candles that are forming like ridiculously, right? They're like more smaller candles, right? So then you have Sydney session, which is like Australia session from 8 to 2 a.m., right? Then you have Tokyo session, which is kind of in the same, right? And then you have London session, where it starts to have more volume right here. And then New York session is where it really starts to have volume. They have New York open at 9:30 EST time or 8:30 Central Standard Time. And for me, I only like to trade New York session, because that's where the biggest moves happen, right? And this is going to be a better example of what I mean by that. So Asian session, right? You can see how it moved, right? Boom, boom. It's a long session. Then London session, it moved up a little bit, but then New York session, and you can see this is where it opened, right? But then you can see it has a huge move up, right? Just to show y'all better, like, look, let me draw. This was the whole Asia session, right? And then this was like the whole London session right here till New York open, right? And then this was the whole New York session. Like, you can see the squares. Maybe Asia and London are the same, right? But New York session is always the biggest session, because it always has the biggest moves and it always has the most people trading. So then we're gonna come into risk to reward. Oh, before we go into that, I'm gonna explain candles even further, right? So as you can see right here, it says 1M. That stands for 1 minute. So each of these candles took 1 minute to form, every single one. But if we were to go to a 3-minute time frame, these are called time frames, by the way, you can see that each of these candles took 3 minutes to form instead of 1 minute, right? So why is that important? Because when you start going to like hourly, right, it changes everything, because then these candles take out a whole hour to form, and you see like they're much larger, right? Because they took out a whole hour to form all these candles, and the support and resistance zones at these candles are just more stronger, because the higher the time frame gets, the stronger the candle story is, because all we're doing is just reading what these candles are telling us, if that makes sense, you know. So we're just reading what the candles tell us, and then we're making a decision, right, based on that information. So then we have risk to reward versus win rate. So what's a risk to reward? A risk to reward is like this. So for every, as you can see on the stop, for every 6 points that I'm losing, I'm making 6 points. So for every 1 point that I'm losing, I'm making 1 point. This is a risk to reward ratio of 1, right? And this is for buys. If I were to buy right here, I would put my take profit order up here, and I would put my stop loss order right here. And then for sells, it's the same thing, you know. Every 6 points, I'm making 6 points. Every 1 point, I'm making 1 point. And then they have different risk to rewards, right? Like let's say I put a smaller stop loss. Now I have 3 points. For every 3 points, I'm making 6 points. So basically it's a 1 to 2 risk to reward. So for every 1 point I risk, I'm making 2 points, right? And you can just keep on dragging it, and you realize, you know, for every 2.5 points, right, I'm risking, I'm making 8 points. So for every 1 point, I'm making 3.2 points, or 3 points. This would be a 1 to 3 risk to reward. And you know, you just drag it off. Now we have a 1 to 4 risk to reward. So that's what a risk to reward is. As you can see, 1 to 9, 1 to 8, 1 to 7, 1 to 6, right? And then you have a win rate. So what a win rate is based on what strategy you have, of how many times it wins in the market, right? And if you're risking 9 for 1 point and you have a 90% win rate, you're at break even. You're not being profitable, right? For me, like, why would you even take any of these type of trades? You know, like, that doesn't make sense for me personally. What I like to trade is a 1-to-1 risk to reward, and I have like a 90% win rate. So obviously I'm right here in the green, profitable. But you can trade all these, you know, risk to rewards based upon what type of strategy do you like. And you can see the risk reward versus the win rate. And if you're profitable, not profitable, break even, or profitable, right? And then we're gonna come to, I think, is the most important part of trading, is the psychology. And I think it's way more. I think psychology could even be like 90%, because genuinely, if you don't have a good psychology coming into trading, you're never ever going to make money. And if you do, it's because you're gambling 100%, right? So trading is not just about charts and strategies. It's 80% psychology and 20% technicals. So 80% psychology, 10% your strategy, and 10% your risk to reward or your money management. And your mindset, it determines if you can stay disciplined, control your emotions, and stick to your plan no matter what. Because the markets are literally designed to exploit human weakness, from fear to greed and impatience. And successful traders, they master their emotions. They don't care about the money. They just think about the profitabilities, about the risk to reward, about what's the percentage of their strategy, right? They don't care about how much money they're making. They don't care about how much money they're making, right? You know, and that's why they're starting to make money. And for me, that was one very hard thing to finally grasp, because I cared so much about the money. I had such huge attachment to the money that it never really allowed me to make money, because that's all I cared about. I didn't care about my setups or anything like that. And when you control your psychology and you stop chasing the trades, you stop forcing setups, and you execute every trade with confidence, that's what makes you a trader, a consistent trader, instead of a gambler. And the top three biggest mistakes in trading is that you're over trading from greed or revenge, right? So traders try to make it back after a loss, right? Or they keep trading after a win to chase more profits. That's just that's just greed, right? And if you think about it, right, like how much money are you making daily from your job? If you can replicate that in trading, why would you always want to make more? Instead, just start scaling little until you start being able to have yourself in a position where you can make a lot of money while risking a lot of money, because you've just been consistent over a long period of time. And the number one thing is revenge trading, because a lot of people, as soon as they lose money, they immediately want to get back in the market and make that money back, right? And then a lack of discipline and patience, right? And this for me was super, 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 super hard, because I always wanted to be trading in the market. I always wanted to be in there. I didn't care about my setups. I just always wanted to be in a trade and see the money go up or go down, right? And good setups are rare, and if you jump in too early, it turns an edge that you had in the market into losses. And for me, like I said, I always want to be in the market, so I made a specific trading strategy tailored to my needs. Everyone is different, right? Maybe you have more patience than me, but for me, I just like being off the charts. I don't want to be trading. I just want to have my trading day be done with, right? And then lack of discipline and patience, right? If you're entering trades like me just to feel inside the market and you're not waiting for confirmation, that's the problem. And then the number one problem is that you're focusing on each trade's results instead of the bigger picture, right? Because that creates hesitation, early exits, and cutting winners short, right? You got to think in probabilities and long term, right? That's the cure to making a profitable trader, right? You always got to trust your setup. You always got to never take greedy plays, because you're not going to make money if you're only trying to make money, if that makes sense. And then right here is the most important thing that changed my life right here. So what I did was I made a set of rules, right? And I made those set of rules and I stuck to them for a whole month, right? After a whole month, and now I'm being able to make consistent profits in the markets, all because I stuck to my rules for a whole month. So yeah, guys, this was just a super, super basic understanding of everything about trading. I didn't go too much into depth, but I didn't go too much into detail, right? But if you guys have questions or anything like that, make sure you join the Discord. Feel free to ask me questions. I'm gonna be helping y'all guys out for free, and they have thousands and thousands of strategies online. So just do your own research, of what type of strategy you like. And if you want to know my personal strategy, hit me up. We can discuss something, because I'm going to be honest, I'm not going to give my strategy away out for free, because that's literally how the market works, that if they have a lot of people winning from the same strategy, of course the market's going to adapt and that strategy is going to start losing its power. That's literally how simple it is, right? Obviously they have a lot of strategies that have been out for a long period of time, but like I said, everything is free on YouTube. So I'm charging for my strategy, but if you want to learn your own strategy, it's literally all free on YouTube, and just do your own research, and I won't mind guiding you to do your own research, but that's not the strategy that I use, and I wouldn't really recommend it. I would just guide you, right? So yeah, guys, make sure if you watch to the end, join the Discord, because if you have any questions or anything like that, I'll be more than happy to give you guys feedback and help everyone, because that's what I'm doing here. That's why I made my YouTube channel. And yeah, just like, comment, and subscribe, please, and just share this video with a lot of people, so more and more people can start eating, bro. So more people can be here trying to achieve their dreams, and so we can just build a super strong community. But yeah, this is Luis. Thank you guys so much for everything, and yes sir, peace out.